Richard, we heard from Marks and Spencer's today. The UK retailer said clothing sales were up 0.7% in the fourth quarter of its financial year. That produced a 5 to 6% pop in the share price. What on earth is going on?
Yes, ordinarily you wouldn't expect a 0.7% increase in sales, especially in general merchandise, and we'll come to food in a minute. You wouldn't expect that to move the needle on anything. But in Marks and Spencer's case, this seems to break a 15 consecutive quarter of falling sales. So it looks as though Marks and Spencer's may have turned the corner.
Is that it then? Is Marks and Spencer's now in the clear for clothing and all's going in the right direction?
Far from it. I think there's real competition out there, but there are other things going on. Marks and Spencer confirmed today that it would have a better gross margin in its full year, which ended on the 28th of March. It also said that its costs were going to be lower than initially guided by about 50 basis points. But there's a problem, and it's a problem that faces a number of things. We cover the bank sector as well, Russia, Ukraine, and then also Turkey. Deteriorations in those markets are a problem, and its international sales have fallen 6%. So Mr. Mark Bolland has got ample work to do still on that front.
Well, in the past, while clothing's been weak, it's always been food that sustained M&S and kept its kind of momentum going. Is that still the case?
It certainly is, because food sales were up 0.7% as well. The thing there is that it really is a remarkable number because it's battling price deflation. It's got huge competition in the UK supermarket space, and you've even got the discounters, Aldi and Lidl, doing higher quality stuff, chiseling at its market. But there's tremendous loyalty in its food market, and people are still going for that.
And where does all this leave the valuation after a bit of a pop this morning?
The valuation, it's still not there. Mark Bolland's got a long way to go. It's trading on an enterprise value to EBITDA is about 8 times, and that plays against 11 for Next, which is a reasonable comparator in the UK clothing space with its rather good catalogues and things like that. So I think Marks and Spencer's still got a bit of catch up today. Today's share price pop may well be just that. It's only one quarter, don't forget, and we need a successive load of reporting periods to show that this trend is entrenched.
More work ahead for Mark Bolland then. Richard, thanks very much.